Good day to bring in Doug Hirschhorn, trading coach, author of 8 Ways to Great Peak Performance on the Job and in Your Life. Doug, we brought you on to talk about Bitcoin, but we're just tossing that away. It's live television. We're just literally throwing in the trash heap. Let's talk about the psychology of these markets here, because there's yesterday euphoria, right? Everyone's running around, markets up 360 points. We've got these Trump headlines, markets fall. You've got really 2 distinct views here, which is that everything's great, MAGA, blah, blah, blah. Trump's in trouble. He's going to be, removed. You got the Watergate theorists. How do you manage to stay focused?
Zen.
Through this.
Yeah, so I will tell you that it's not by thinking happy thoughts. It's actually by looking at the math of things and taking any kind of emotional experience that's affecting your decision-making process and doing your best to compartmentalize it through a process. So as an example, the market's down 200 points, and we think, oh my God, that's a lot. But if you look at actually the percentage, it's a very small percentage.
You try to mention that.
You really got to think about it. It is 200 points on 24,000 points. That's like saying 1 penny on a dollar is a lot. And actually, it's not. 200 points sounds like a lot, but keep it in perspective to a percentage move, and that will help you make more objective decisions with your investments.
I know we wanted to throw out Bitcoin, but the moves, I've heard market participants say, look at Bitcoin. The pathologies that occur in a market peak are emblematic of what is happening with Bitcoin. How do you think through the psychology of what Bitcoin is telling us about the overall markets?
Well, what's unique about Bitcoin is no one really knows how high it can go. We know it can go to 0, right? But no one knows if that's 100% certainty or if it's got some probability of going up to 1 million. People are talking, very smart people are giving both sides of that coin. So Bitcoin is not comparable to the markets, but we form a bias, a psychological bias called anchoring. And what happens is we look at Bitcoin and we say, wow, it was, 1,000 worth 1,000 at the beginning of the year in January. Now it's 11,000 or 10,000 and nothing moves that high and that fast ever in the world of the markets. And so we start to try to associate with things like gold that were called commodities or other things that we're familiar with. It's a different kind of animal, and that's why you want to think about Bitcoin as a longer-term thought. It's fun to watch, it's exciting, it's cool. Blockchain, most people don't understand what it is.
But don't use it as a signal.
But don't use it as a signal.
How do you take emotion out of investing? I mean, that's what you began saying, that this is what you have to do at a moment like this.
Sure.
Starts with a corkscrew, Tyler.
Yeah, you're right.
Or a bottle.
You make a phone call to Dr. Jack Daniels.
And a straw. So it's actually by having a process, having some kind of a process that you can put into place so that we're human beings, we're going to have emotions, and that's going to affect our decisions. As with any decision in life, if you have a process to go to, that helps you make decisions that are called based on smart risk rather than based on your own personal emotions and biases.
You can be so wrong. I was so wrong heading into this year.
It's okay.
I thought that it was going to be a very bumpy year because the market had been rising a lot.
Right.
And I talked to some of my financial advisors, people who I have 401ks with, whatever, or rollover IRAs. And the result is that I cost myself a lot of money. Now, it wasn't because I was being emotional, though I was afraid of the uncertainties that were out there. I was trying to be rational, but I was wrong.
You were wrong. So let's look at Wayne Gretzky. I think most people are familiar with Wayne Gretzky, Hall of Fame hockey player. He had a fantastic expression that if investors can think this way, it's a Hall of Fame mentality. He made a career out of going to where the puck was going to be, not where the puck is. And investors should be thinking about where is the market going to be in the future, not in the little microcosm of where I see it today or tomorrow or this week, but in the future, down the road, fundamentally, where do I think things can be and develop into, and then make investments based on that thought process.
Thank you, Doug.
My pleasure.